Hub Radio Phoenix is an internet-based podcast platform providing numerous special interest programs reaching over 100,000 viewers per week. Hi, I'm Ron Ludders, executive producer of Hub Radio Phoenix. We don't pretend to be journalists, but we're not afraid to say what's on our minds. We thank you for watching, liking, sharing, and subscribing to Hub Radio Phoenix. Stay tuned, stay faithful, as the best is yet to come.
You're watching Backstreet Gossip, news talk, current events, and political commentary with your host, Ron Ludders. Now, let's return to the show.
Welcome back. We're here with Ray Michaels and, of course, Peter Martin, or Martin Peters, both of them, whichever you prefer. Once again, we'd like to thank our sponsors for sponsoring this show, and please go and use their services. There's some really great sponsors here. And also like the show and subscribe to it. We need to get lots and lots because we've got a big battle to fight in the future, and the more soldiers we have on the team, the better. So, Peter, when we left, you were giving us some, I guess, bad news.
Yeah, some sobering news, yes. Well, actually, during the break, Ray, you had mentioned who is actually directing the Federal Reserve to do what they do. And we have actually a very interesting relationship. Many people in our audience and across the U.S. are familiar with the company BlackRock. Mm-hmm. It's basically the largest financial asset company in the world. And they have a very close relationship with the Federal Reserve. The guy who runs BlackRock is Larry Fink. And I am quite certain that he's taking his orders from the globalists who we mentioned in the beginning. And what I want to do now is play a video so that our audience can tell what this guy, Larry Fink, is all about, what he believes, what he thinks is good. And this will be very telling in terms of what globalism means in terms of how the rest of us get treated by that globalism. So, Neil, let's run the Larry Fink video, please.
Uncertainty. Markets don't like uncertainty. Markets like actually totalitarian governments where you have a understanding of what's out there, and obviously the whole dimension is changing now with, as you said, a democratization of countries, and democracies are very messy, as we know in the United States. You have opinions changing back and forth.
Yeah, so isn't that interesting, Ron? What did you think?
I think the man is a Fink.
Yeah. Well, I don't think he would argue with that, although I catch your meaning, yes. But, notice the putting down of democracy, and early on in the video, really praising totalitarianism.
Right. There's no reason why values shouldn't change as the times change. I mean, there was a time when I remember when my grandfather was a lamplighter, but today they're automatically come on at night, the lights. So
yeah.
Well, you know it's so strange. And when you talk about totalitarianism, when you talk about communism, when you talk about socialism, when you talk about all these things, we have a history. We have a world history to see exactly where it starts, what happens in the middle, and where it goes. We know that. Yet here we have the United States of America that, starting in 1776, within a short, less than 200 years, there was a 5,000-year leap in history. We went from horse and buggy to putting somebody on the moon because we, as individuals with individual rights,
in less than 100 years.
Well, we didn't put somebody on the moon in less than 100 years.
Well, sure, from the horse and buggy days.
Well, no, they had horse and buggy in 1776.
I get what you're saying.
Yeah. So my point is that we see historically that massive leap that we did simply because we let people live their own lives.
Absolutely.
We gave them their life and their liberty and their property and their pursuit of happiness.
Yes.
And by unleashing that, you unleashed
Yes.
this amazing
Productivity.
idea, which is America.
That is exactly how it happened. You're right on the money. And you can see it in history, as you said.
So how can he talk about we prefer totalitarianism?
Ah, okay. Well,
Especially somebody that cannot have missed this. You know, when I was talking
Yeah.
about this, Ray,
Yeah.
a horse and buggy in less than 100 years, the last horse and buggies were still about 1910. They were still using horses and buggies and vehicles. But by 1969, we had men on the moon.
Now, here's what's amazing. Do you know why they created the automobile, the internal combustion engine? Do you know why, what the main purpose was? It was to help the environment. 100%. Because
Yeah.
what was happening
Yeah.
is the horse and buggies, the manure from the horses were piling up on the streets so high that the more and more horses you had, the more manure that had to be removed. And they said, environmentally, we can't handle this much
waste.
this much waste. We have to come up with
Yeah.
a better idea to clean the environment.
Yes, yes.
And that was the automobile.
See, nowadays we've transfigured
That's
that
interesting.
manure and we have moved it from the streets into the Capitol building. See? That's where we keep it now, see? Yeah, so
In the House and Senate.
Isn't that
White
amazing?
House.
Isn't that amazing? It's the perception of things.
Absolutely.
It's all perception changes.
But it's totally true that the ascent of humankind is absolutely paralleling the ability to retain the fruits of one's labor.
Yes.
It parallels capitalism. When capitalism is structured in a way so that people have an incentive to do things, to invent, to make new businesses and new products, and then keep the fruits of their labor.
That's what it was all about?
Yes.
Absolutely.
Yeah. So now, of course, if you're an elitist like Larry Fink or like many of the families that I mentioned earlier, well, you want to stay on top.
Yeah, it's not about the little people.
No.
It's about us.
Right.
We're the special ones.
Yes,
They are here to serve us.
absolutely, yes. And so now that they are on top and have been for hundreds of years, it's important to bring in a structure that cements their position on top so that that doesn't change. See?
I'm sure they didn't like the American Revolution.
No, that couldn't have been in their favor. For sure not.
I wonder how many of these families, Ron, you'll remember this. The only reason why we had the money to fight was the Dutch. They're the ones who loaned us the money
Yeah.
to go through that revolution. And I don't know if there's any Dutch families in there. I don't think there are.
There may have been, but I don't remember which name, but
Yeah.
there might have been one or two.
Because
Van,
they would.
Van Winkle.
Yeah,
What was it?
Van Winkle.
yeah. But,
Is he
Rip.
still
You
sleeping?
remember old Rip?
Yeah, is he still sleeping?
He's still sleeping.
well, the idea of the globalists cementing their position on top, not allowing themselves to lose, in other words, making their monopoly strong on power, entails, of course, and this is above everything else, they must retain their monopoly on what we call money. So whatever we view as a society as money, they've got to control it 100%. So if there's any competition that comes along that represents a different route of looking at money versus the fiat currency system that the central banks are running, then they need to eliminate that. And that, in fact, is one of the main goals of this great reset that's coming now. So I want to go to slide number 9, Neil, and let's take a look at what I'm certain will be a major, major target for this great reset. And in fact, for the cyber pandemic, both of them. I mentioned the cyber pandemic on July 7th on this show. But I want you to first look at the right, the upper right. This is a general diagram. It shows how a bubble moves. This is not a specific asset. This is a bubble in general. And you notice certain phases that it goes through. Most notably over on the right, you can see fear, capitulation, despair. That's the crash of a bubble. That's the popping of a bubble. So this is a general diagram. Now, I want you to bear that in mind, okay? And there's not too many bubbles over history that have been created intentionally, but some of them have been. And if you look in the lower left, you're going to see a chart of Bitcoin. Now, notice the similarity in the formation of basically the way that the chart moves. Where we are now on Bitcoin, I still think there's actually one more move up left to go. But basically, we're looking at one more little move up here, possibly to 55,000 here in the near future. And that will complete, in my view, the move to the return to normal, which you see in the upper right-hand corner on the bubble phases diagram. Now, we're looking at a classic pump and dump here with Bitcoin. We're looking at a bubble that the Federal Reserve created with that very large money supply growth that we looked at earlier, 27% year-over-year growth in the money supply in February of this year. That was the creation of this Bitcoin bubble. And now they're pulling the rug out from underneath it by more than halving that money supply growth. And also in the reverse repo market that we looked at, pulling out liquidity at not just a record pace, but a pace that's something like 4 or 5 times greater than the rate that they've ever pulled money out of the financial system. So they are after, the Federal Reserve that is after this asset. They are gunning for Bitcoin. And the rest of cryptocurrency is also a major target of theirs. I want to make that clear to our audience because I know there are 30 million people in this country who are looking at cryptocurrency as a means of salvation. And ultimately down the road, it may well be that. I'm not saying that Bitcoin or Ethereum or any of these stable coins are going to forever be down and out. But be aware, in the near future, the Federal Reserve Central Bank is going after this asset class. And I expect that they will succeed in taking it down very, very harshly. I would not rule out Bitcoin going to zero or even maybe negative. Now, how might I say something like that? How could we look at Bitcoin at negative? Well, let me just remind everyone, and people have forgotten now, last April, I believe it was the 20th of April in 2020, do you remember when oil was negative?
Yes.
Yeah. They actually got the most used and most demanded commodity on earth, oil, at negative $37 per barrel. That was achieved. It's a product of history at this point. So if you can envision that happening to something that some 6 billion people on earth use every day, imagine what they can do to Bitcoin.
Now, for most people who are, you've heard the term, you've seen it around for a little while now, can you just give us a quick snapshot of what Bitcoin is and how it's used?
Absolutely. Bitcoin basically serves as an alternative to the dollar or any other.
It's electronic currency.
It's electronic currency.
Okay,
sure.
so you have an electronic account, electronic amount of money, and you trade it electronically. It's
Yeah.
never you never feel it, you never touch it.
Yeah.
It's just there.
Absolutely.
Do you buy it with actual dollars?
You can buy it with actual dollars, yes, and you can keep it or get rid of it.
It's almost like being in a computer game and you earn points and you're gambling with
Yes.
the points, and it really doesn't, you don't think of it, or Monopoly money.
Yeah.
Oh, I'm going to buy this, and you throw the money down. But there's no backing to it, such as
No.
a gold standard or anything like that.
No backing to it. What Bitcoin enthusiasts point out quite correctly is that there is a limited supply of it. So unlike the fiat money system of dollars, euros, Japanese yen, Canadian dollars, there's not an infinite supply of Bitcoin to be created.
But if they created it to begin with, they could in the future create more.
No. The program is locked. It's actually locked in, and it's still being created, but at a lesser and lesser rate as time goes by, and there is a maximum amount of it that will be created. It's in the program. And most importantly, this is a decentralized program. So now you can see the appeal of it, because the US dollar or the euro, these are currencies that are controlled centrally by central banks. In other words, we as people are being lorded over by these centralized banks that are controlling what we use as money. Bitcoin is very different. Bitcoin is decentralized. It is not under any one person or entity's control. That's the appeal of it.
But it's not big enough to take down a centralized bank such as the Federal Reserve.
Ultimately, perhaps it could be powerful enough
But
to
they're not
do
going to
that.
let that happen.
Peter,
They're going to go after it for sure, big
Okay.
time. Yeah.
the question that I would have, you're talking essentially, you were discussing at the beginning people from all around the world, and yet you're talking about the Federal Reserve, which of course is only affects U.S. dollars. But the U.S. dollar, of course, currently is still the standard in the world. So how does taking down the U.S. dollar, the market, affect the entire world?
Okay, let's make a distinction between the U.S. stock market and the U.S. dollar. Big, huge difference. And this is where I want to actually bring an element of calm to our viewers, because a lot of people hear
Are freaking out?
a lot of people hear the idea, they hear stock market crash and they think, oh my God, do I need to
1930s.
take all my money out of the bank? Yet, no, that is not the case. It's actually very different, very, very different. And what I'm going to show the audience now is actually that the US dollar is going to be strengthening significantly in the near future. This process of the Federal Reserve literally pulling dollars out of the system, this is going to serve to raise the purchasing power of dollars. So the inflation that you mentioned, Ray, quite correctly, we have had price inflation. This, in the very near future, is going to turn around completely. And that's where most financial advisors out there are leading people astray, because they're focusing on where we are right now and not looking forward just a few months to see what our landscape is going to turn into in the near future. And Ron, we're going to address the dollar right now. Neil, let's go to slide number 10. Now, this is a somewhat longer term chart. It goes back to 2011. And what you're seeing here is the US dollar index. So it is a chart of how the US dollar has performed against foreign currencies. It's actually a basket of 6 of them. The euro is in there, the Japanese yen is in there, the Swedish krona, Swiss franc, Canadian dollar, and there's one other I'm not thinking of right now. But this shows you that since 2011, what the dollar index has formed is what's called a head and shoulders pattern. Now, this is a technical pattern. I'm not going to explain technical analysis here, but I know some of our listeners do know technical analysis. So for those who know it, I wanted to show the shoulder on the left, the head in the middle, and the shoulder on the right. Now, normally, breaking underneath that long blue line would imply that the US dollar would go careening downward into the 70s. Right now it's at a level of 92.5. So, but you can see that's not happening. So the normal exit from a head and shoulders pattern is not happening here. We are in fact consolidating over on the right, and we have a little inverse head and shoulders pattern. You see a little SHS on the right. This is forming what is, without question, a bear trap in the dollar. And we can see, going back just a few months, there was one of the record largest short positions against the US dollar, meaning investors were betting big money on the dollar declining. In other words, hoping for it to decline based on the bets that they were making on it. Well, some of our listeners are aware that when you get a very large short position against something, that often sets up what is called a short squeeze. In other words, the item in question, instead of declining, it starts to move up. And these folks who bet against, in this case, the US dollar, they start to panic. So the dollar moves up a little. And you get the first round of investors who are against the dollar, in other words, shorting the dollar. They think, oh boy, I made a mistake. I need to cover my position. So how do they cover it? How do they get out of their position? Well, they have to buy dollars. They literally have to exchange what they have and get dollars in order to unwind that short position. That, of course, makes the dollar move up. And what happens then? Then you get the next round of investors looking at the same situation. Oh boy, I bet against the dollar. It's moving up. I need to reverse this position. And so then they buy dollars, and it just spirals on itself. This is what's called a short squeeze, and results in the most powerful bull markets that ever exist in financial markets. So what I'm letting the audience know today is we have a perfect setup here from the perspective of short positions, from a technical perspective, even from a fundamental perspective, looking at the Fed withdrawing dollars from the system. In other words, making the remaining dollars more precious. When there's less of something available, it gains value. That's what we're looking at here with the dollar. So don't make the mistake of thinking stock market crash means weaker dollar. Sometimes historically it has coincided, it has gone together. In this case, no way. The dollar right now, the US dollar, is primed to move up dramatically in strength, not by a small amount. This will be major. What is 92.5 right now on the US dollar index, I would not be surprised if in the next couple of years this hits a new record high, which, by the way, you have to go back to 1985. The record high is 165. So I'm literally calling for a move from 92 to over 165. The dollar is going to get so strong, people won't believe it. This is going to knock people's socks off. Okay? So the inflation, Ray, you mentioned the inflation that we're feeling. It is, and oddly enough, the Federal Reserve is being honest with us right now. Well, because they know what they're doing. They've told us to look at the price inflation as a temporary phase.
Right.
Indeed, it will be temporary, and they know exactly why.
So it seems like what you're saying, Peter, is that rather than holding your dollars in stock, it's better to hold them in the U.S. dollar.
It is very good to hold them in U.S. dollar, yes. Now, there may, at some point down the road, be a lot of bankruptcies. The stock market crash itself is not going to do that. As we covered today, a stock market crash simply means money changes hands. Mm-hmm. It leaves little guys usually, little girls usually, and goes over to the globalists, but it doesn't actually reduce the dollar supply. Down the road, we may get, and I think probably we will, get an actual reduction in the dollar supply. But yes, I would say holding dollars is a great thing to do right now. It is, and I've had many discussions with my clients about this. I tell my clients, start looking at the U.S. dollar as your choice investment. Don't look at it as a place to hide out because you can't figure out what to invest in. No. Get rid of that type of thinking. Start looking at the U.S. dollar as your choice, go-to investment. I'm not saying sell every asset you have. Don't do that. Maintain your diversification. Don't ever get rid of your diversification. But make sure that the U.S. dollar has a prominent position in your portfolio.
Now, is this taking the dollar and putting it in a safety deposit box, or investing it into a short-term, long-term? What are you saying to do with these dollars?
I'm saying have some cash in the house, thousands if you can, but by all means keep money in the bank. And if you have enough money, you know that the FDIC insurance only goes up to $250,000. Right. So if you have that much or more, diversify your dollars among multiple institutions. Don't have it all with one bank.
Right.
Because that one bank can get into big trouble. And some of the biggest names out there very easily can get into big trouble. So don't have it all in one place.
Well, Peter, what would be your final words to the audience?
Are we running out of time?
We're running out of time.
We are running out of time. Okay. Well, I would say, very importantly, the Federal Reserve is obviously setting up a deflation here. They're setting up a much stronger dollar. They're setting up a crash in at least 3 asset markets, that being stocks, precious metals, and definitely cryptocurrency. So what they will try to do is they will try to mitigate that deflation. And you can already see it by the supply chain disruptions that we've experienced so far. They're going to crimp supply chains in order to prop up prices somewhat, because they don't want this turning into a deflationary spiral like the 1930s. So they're going to try to play both ends of this thing. Deflate the financial assets, bring down these asset markets, but prop up consumer goods prices at the same time so that it doesn't get out of their control. They're going to try to come out the other end in one piece. I don't think they're going to make it. I think people are going to be extremely upset when this all runs its course.
All right, so just in a nutshell, keep as much cash as you can.
Yes.
Right? Stocks, bonds, we're looking maybe for a reduction.
Bonds can do well.
Okay, so bonds can do well.
But
Stocks, yeah. Precious metals, gold, silver.
I would not go for that. Gold usually moves opposite of the dollar. So if we're talking about a rising dollar, gold likely takes a hit. So does silver and anything related to it.
Okay. Anything else? Mutual funds, their 401ks?
Comprised of stocks or bonds.
And diverse.
Yeah.
Is the key.
Take a look under the hood, see what you've got.
Now, I know there's so many people out there, and they're like, where did Peter Martin come from? What about his business? How do we get in touch with you? Can you give us a short commercial? How do we get in touch with you?
A short commercial.
Yeah.
Well, I'm a Phoenix metro area financial advisor. You can certainly visit my website and contact me through the website. It's martinfinancialsolutions.com, and there is a tab on there. You can even read some of my old newsletters to see what I thought a long, long time ago. And you can send me a note through my website. I'll be very happy to get in touch with anyone who contacts me by that means.
And one more time, Martin?
martinfinancialsolutions.com.
That's awesome.
And you know, those of you that are watching here on Hub Radio Phoenix, don't hesitate to write a note here. We'll get it to Peter. So if you have questions and comments, please put them down. We'll make sure that Peter Martin receives them. Peter, thank you for being on the show. We've got another segment
You're welcome.
here, and
Thank
I would
you.
appreciate it if you'd stick around for it.
Absolutely, I will.
We're going to be talking about, of all things, there's a big election in California tomorrow.
There is?
There is, and it's a recall election, and we're going to tap
Isn't
into
that
a
Nancy
couple of
Pelosi's
people.
nephew?
Yes, Nancy Pelosi's nephew is the
Yeah.
governor of California. Bet you didn't know that, did you guys? So stay tuned. You're going to find out a little bit about what to expect tomorrow in California. Don't go away.